Hello my dear traders, Planet Trader is here, and today we will dive with you into the topic of fundamental analysis. And today I'm making my $50 contest, so guys watch this video till the end as I will reveal the details of my contest throughout. And I've already opened the first deal of today, which is gonna be on British pound to Japanese yen. We are going to TradingView, finding here our currency pair. And what can we see on this chart? We clearly see an uptrend which continues to grow and finally reaches the historical high, which I'm gonna mark. And here we see the false retracement, which could possibly bait us to believe that our price is gonna go up. But it won't happen, because after we reach the historical high, we're expecting here a trend reversal. And what are these fundamental factors that drive the economy? They are a combination of various elements that shape a country's economic and financial framework. These include key data like inflation, unemployment, economic growth rates, and more. Fundamental analysis is basically economics. For a trader, it's usually applied economics. But don't worry, you won't need to memorize complex theories or tons of formulas. Your goal is just to understand economic news in simple terms. Not only should you understand it, but you should also learn how to use it in your trading. If you approach fundamental analysis as a practical and engaging subject rather than boring theory, you will find it fascinating to learn how money is created and flows around the whole world. Economic indicators play a crucial role in this type of analysis. And no, we are not talking about technical chart indicators now. Think of them as signals that light up, revealing the state of country's economy. What's important is not just the data itself, but how investors and the global market respond to it. You need to understand what will happen with the market before and after key news is released. Fundamental analysis often involves studying different kinds of news. For example, a planned change in interest rates might strengthen the dollar. When economic data falls within a certain range, the euro may drop. And the industrial production index has fallen by 2% now. Also, we know, guys, that governments and central banks constantly implement monetary policies to reach certain economic goals, especially regarding inflation. And we gain our first deal of today in profit. And now let's find the second deal. But before we find our second deal, I want to remind you guys about my free Telegram channel, where I'm giving daily profitable trading signals, and you can easily join absolutely for free. The link you will find under this video. And I already opened our second deal of today, which is gonna be British pound to Canadian dollar. And let me explain you why I'm going here for buy. First of all, we see after our trend has reached a historical low, we see a huge spike which pushes our trend to going higher, and it goes until the consolidation phase, which is gonna be right here. And after it, there is a very huge upside potential with a very downside risk. That's why I'm opening it for buying. And let's talk now more about monetary policy in the currency market. And when we talk about central banks, we are really talking about monetary policy. After all, those folks are there for a reason. And many central banks have similar goals because people always demand better living standards, higher wages, and lower inflation. However, because economies differ, the policies of central banks also vary. The main goal here is clear: to ensure price stability and healthy economic growth. And central banks achieve this by controlling several factors. And let me tell you about them. First one, interest rates, which determine the cost of money, loan interest rates. Second one is inflation growth, then goes the amount of money in circulation. The next one is capital adequacy requirements for banks. And the last one, the discount window allowing commercial banks to borrow from the central bank. And now let's talk more about types of monetary policy. There are several types of monetary policies, but generally they all fall into three categories. First one is contractionary, next one is expansionary, and the last one neutral. Contractionary monetary policy aims to reduce the money supply in the market. This often happens when interest rates are raised. The idea here, guys, is pretty simple, and let me explain you how I'm seeing it from my point of view. The central bank tries to slow down economic growth by making money more expensive, which means they are trying to raising loan interest rates for commercial banks. And when these loans become more expensive, banks borrow less and in turn lend less to businesses, which lowers investment and spending. And right now, we already closed our second deal with profit, and now I'm gonna find our last deal of the day, and I hope it's gonna be in profit as well. And now, guys, what should you do to participate in my $50 contest? Everything is pretty easy. You just need to like this video and leave me any comment you want. You can leave up to 5 comments from one account. And here, I did already mark the consolidation phase at the start of this chart, then a huge spike which pushes our trend to go up. And here, I'd like to ask you guys to pay attention to these patterns, because they are actually looking pretty similar to each other, don't you think so? And what can we draw here till the end? Here is our entry point, and it's absolutely the same, these three patterns. Look at this, and I'm buying here for sure. That's what I expect here, guys, and it's gonna go higher. And now let's get back to expansionary monetary policy. On the other hand, increases the money supply by lowering interest rates. Cheap loans become available to everyone in the hope that businesses will borrow, expand, and create jobs which boosts consumer spending. And this type of policy encourages economic growth by lowering interest rates, while contractionary policy aims to control inflation and slow down growth. And the last one, neutral monetary policy, doesn't actually have a specific goal like boosting growth or controlling inflation. It's important to note that central banks usually have a target inflation rate, we can say like 5%, and they may not always state it openly, but their monetary policies are often directed toward maintaining that level. Everyone gets money and everyone spends it. That's real. It calls capitalism. Liquidity flows generously and people enjoy the benefits of it. So overall, fundamental analysis is a really fascinating thing, but only for those who get really deep into the topic and understanding how the world actually works. It can either replace all other types of analysis or complement them. Your trading instincts will guide you guys. Just follow what feels right for you. Keep in mind that fundamentals require constant reading, economic books, reading global financial websites, analytical reports, and so on. So if you don't enjoy this kind of stuff, it's okay. It's just not for you guys. And that's it for today. We closed 3 out of 3 in profit. And I've told you guys today about fundamental analysis and its basics. Panda Trader was with you. I wish you only profitable deals. Good luck.